Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, March 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up a penny at 458 3/4. May soybeans are up 3 at 1004 3/4, and May Chicago wheat was down a penny and 3/4 at 541 1/2. Yesterday afternoon, we got some updated planning progress numbers from the USDA. Louisiana, 65% completed, 45% for Texas, 14% for Mississippi, and 10% for Arkansas. These numbers were mostly in line and a little bit ahead of last year, so they're making really good progress down there through the South. Guys, we... no export sales announcements or anything of that nature. I guess some big news yesterday out of Washington. The talks between Russia and Ukraine starting to yield some back and forth here. But what we know this morning is that it looks like the expansion of Russian fertilizer exports are on the table, with U.S. brokering that deal. They're looking for safe travel through the Black Sea, and the no more bombing of energy facilities. And so it appears that both sides are in agreement in those terms. There's some things that need to be worked out with the European Union, but as always, that's kind of a fluid situation. So we'll keep all that on the forefront of our minds. I know that some fertilizer stocks were lower yesterday on some of this news because of potentially open up supplies and things of that nature. So with that, Justin, maybe a few thoughts to kick us off here this morning, and then we'll throw around the room.
Yeah, I mean, not much change. I'm kind of still in a holding pattern. Markets are choppy, kind of directionless right now. As we talked about, actually did a little thing for the Andersons yesterday, but just kind of talking about crop insurance and forward outlook. And I think there's, as you talk through everything, you could kind of write down not too hard to write down a bullish or a really bearish scenario here, depending on how things kind of pan out the next 30, 45 days, between acres and how the safrinha crop turns out, how these tariffs, do or don't go into effect, and to what degree, some of these policies. So it's just, sound like a broken record, but just kind of try and be open-minded here. I don't think there's anything that says we should go sharply lower or sharply higher at this point until we know more. So I think that's, if you look at the markets, I think that's what's happening. You're getting just kind of chopping around. There's some money moving around, but I think there's a lot of money on the sidelines right now in our markets just for these reasons. Sure. Waiting for, what are old crop corn stocks? What are, all these kinds of things. I do think you'll have, and that's why I don't think you're seeing any export sales announcements. I think just trade is just slowed down in general, kind of waiting to see how these things happen as well. So a lot of different players that I think will come back in our markets one way or the other pretty soon.
Yeah, not seeing cancellations either, which I guess is positive as well.
Yeah, I mean, there's obviously, we have a good demand market. Some of the things have ticked down, like, biofuel demand. I think that's also driven because of policy uncertainty. Yeah, I just think there's a lot of money on the sidelines in ags, just waiting.
Justin, it's interesting. Overnight, we had a question from one of our viewers. And yesterday we had kind of a deeper dive into just the ag economy, but there was a question posed that, what are some of the things in your opinion that could cause land prices to drop drastically in the next 12 to 18 months, if any?
Yeah, I mean, you could argue that if we stay here or lower, I mean, you can't, in my opinion, you can't continue to have, losses. I mean, working capital drawdown, eventually it's probably led by the cash rent market, eventually. You'll have investors that keep stepping in, but prices have gotten pretty inflated, obviously, with land. But to go pay $400, $500, $600 an acre and to lose 200, you can only do that for a not very long amount of time, right? So I think I personally think it's probably a cash rent correction where people just aren't willing to pay that. That takes a little time, obviously. Or, obviously a downturn in the economy, all this kinds of thing. We're coming from, all-time high prices. So obviously if there was a sharp uptick in interest rates again for some reason, if inflation really ramped up. Obviously if the product that you're renting, you do it at a big loss, how many times can you do that?
Yeah.
So,
With farmland being such a quote unquote safe, long-term diversified investment, that's always kind of been how it's been viewed and things like that. So we reference outside money, interest rates, and where they're placing money. I mean, it takes a lot for them to just pull back and say, well, like farmland's not fun anymore, right?
yeah, no, I don't think that. I mean, but to have a 20% correction in any market is common. I mean, look at the S&P, look at any asset, right? That's been inflating or going up for decades and decades, farmland being one of them. To have a downturn, I mean, that just happens. So I think it's still going to always be a good investment. It's just, is there better investments? Do people step away from that? It wouldn't take, there's only so much farmland that trades hands. So if it goes from a buyer's market to a seller's market, or vice versa, it can move pretty quick. It's kind of really hard to track, right? Because you'll see like land sales, even in Illinois, where you'll see like one that goes for 8,700 and then one that's 15,000, and they're not too far apart on land. So land's kind of a really tough one to track. It's not as easy as like the S&P, but do I think land's just going to fall a bed? No, I think there's enough domestic demand and investors that want to be in it, but certainly to have a 20% break or something would just be a normal thing at some point.
Yeah. And a huge change in balance sheets, I mean.
Yeah. And I don't know, it's, you look at banks and how they even put land on balance sheets. A lot are discounted quite a bit, not necessarily mark to market anyway. A lot don't, they're not putting $15,000 an acre as the value of that asset. So I don't know. It might just, it might just be where, a farmer can't, with working capital being tight, can't afford to go buy $15,000 an acre ground right now. Right. So then it goes to the next tier, which is just the investor that wants to make call it 4%, whatever that number is that they want to make as a return. And if farmers aren't willing to pay that, then that has to go down to that price where they can still get a 3% return on the land that they purchase. So, right. So that's kind of how that works, in my opinion.
Oh, very good. Ben, what's on your mind this morning?
I wish I could hit fast forward on the calendar and be a week forward.
Amen.
Life goes by too fast. Just, you don't need that.
Slow down, Ben.
Slow down.
Want to get the report out. Want to see what the early April dialogue is going to be over tariffs, and make the transition to focusing on weather and new crop. I think, that'll come a little bit slower, but I do think that we're kind of in a vice here, uncertainty of people that don't want to step in here and make huge commitments either side. And, the report, this is typically, we have a pretty big market move on this report, which will be interesting as we've sat here and consolidated in both markets for the last 3 weeks. So I don't expect anything to change majorly, before that. Worth noting that the 200-day moving average in old crop corn continues to hold. If you look at the price action just based on what's going on with tariffs, which I think has been the big kind of risk off component, really grain markets have held in pretty well. So we'll see if there's enough on this report and on backing maybe some of the trade war discussions, maybe backing down on that a little bit, and we can get some footing underneath us. Worth noting that last week we had another big liquidation in corn and we finished the week higher. So we'll see. Does manage money want to take the risk of getting wholesale short and on March 26th to April 15th? I mean, that's a pretty big risk going into summer, especially with producer that we know has been. I mean, when we were on our highs, the estimate was that the farmer was sold somewhere between 70 and 75% of their crop. So I think that's a pretty big risk.
Very good. Listen, we'll transition quickly over into livestock here. We got a couple of minutes. Rylan, we've got continued volatility, $2 price swings in the cattle. Hogs kind of feel like they're choppy ahead of hogs and pigs tomorrow. So what are your thoughts here as we start the morning?
Yeah, so once again, it was a nice little reversal kind of price action. You bounced off the lows. Looked like a couple things were going on. I mean, there was a massive $8 rally in choice, so it looks like the Packers are really kind of gunning for margin, and they started to pick up a little bit of cash trade at lower money. So, I mean, we saw a little bit in 208 in Kansas, a little bit of 330 dressed in Iowa, 335 in Nebraska. So, I mean, they're definitely chomping at the bit. So with that being said, there's still a lot to know about how this week's going to shape up. But with beef prices just skyrocketing in kind of one day, you would think that that's going to kind of perpetuate a little bit of a sense of optimism just kind of going in to the tail end of the week. So kind of watching to see what happens there. If beef kind of reverses that trajectory, maybe we see some kind of different price action, but overall open interest is still climbing up here. Really haven't seen much liquidation, which I think a lot of people really expected to see here. So I think the interest is still there, and there's quite a bit of support right now. And as far as hogs go, they tried to rally early. They just couldn't quite keep the pace. So, rallied pretty much right back to the 10-day moving average in April and failed. And just overall felt like, we did have a cold storage report yesterday. And overall, I didn't think it was a big shock, 458 million pounds. That was up 4% from last month, still down 8% from a year ago. I think that was to be expected, especially with just how the price action kind of shaped up, and bellies coming in at 63 million pounds, 63,745, still up 17% from last month. So yeah, I mean, once again, you kind of got a little bit of kind of just neutral kind of news here. I mean, maybe you could make a case that the belly number was on a little bit of the negative side, but generally from what the market is expecting, we're pretty close, I think. So overall, it just feels like you're still not getting a lot of direction as far as the hogs. Cash prices were down yesterday, $1.64, 88.65. So once again, just feels like we're languishing before the hog and pig report.
Very good. And so we were pretty busy overnight with comments from our followers and our listeners here. Bob comes to us, Rylan, with a question on the beef side. He said the real risk for the farmers, not so much the price, but why would they take the chance on heifer retention? You can take that heifer to auction and get nearly $3,000 for it, or breed it and take the chance that it might die, black swan hits, or prices drop. Farmers are going to take the $3,000 every time. In Bob's opinion, he's retaining very few heifers, kind of just enough to maintain his herd size. No different than drill, baby, drill. Why would I want to expand and shoot myself in the foot with lower prices? What do you got for Bob?
Right. I mean, he makes a good point, which is prices are high now. Why would I risk this down the road? Why would we do this kind of boom and bust cycle all over again? I mean, we are kind of at that 10-year cycle mark, right, between the last peak. And I think the idea is that, like, you need the stage to be set to see this expansion, to see heifer retention. The incentive has to be there, and the incentive obviously is going to be profitability. And so he's saying it's better now. Why take the risk? And I think there's a lot of that. Could it get better down the road? Absolutely. I mean, and I think that heifer retention typically comes as we start seeing these returns. Once the market really kind of establishes itself as profitable, I think generally you just kind of get that mentality that we can retain heifers. We're going to make more money on these down the road. So I mean, the stage is kind of set with the price. I think that's stage one, but you still have to get through. The springtime. I mean, this is going to be really important. Are we going to get the rains? Are we going to be in a drought situation where we are forced to liquidate again? It feels like this cycle is taking a really long time, and I think that mentality and just the state of the U.S. Weather system has really kind of facilitated where we're at right now. So, I mean, like I said, I can't really disagree with his mentality. There is that potential for a black swan. There is that potential death loss. But on the other hand, if there's more confidence starting to build up from the potential return out ahead, I mean, I could make the case that there's a good chance that we may be starting to expand. I mean, we may not see this in the data for another year or 2 years even, but prices could go higher. I mean, I agree. It's not all about price when it comes to this kind of thing, but obviously that's kind of the mitigating factor when you're looking at where things are at right now, so whether retain or sell, it's a great question,
Oh, very good. I appreciate Bob's feedback there and everybody that contributes. We just opened the markets here. We'll get a quick rundown. May corn up 1 3/4. 459.5 is the last. May soybeans are up 4 cents at 10.05.5, and May Chicago wheat's down about a penny at 5.42 1/4. Tomorrow morning we will have weekly export sales. They'll be out at 7:30 Central. We'll take a look there. Certainly visit about that in tomorrow morning's War Room. Also, Jack's got more info in the outro, but we do have about a week left on our special offer that we've put in place for new clients to AgYield. So love to visit with you. We've got the 31st report coming up real quick here. If you want to make sure that everything's in line and bounce some ideas, we'd sure love to visit with you. So give us a call. And thanks to everybody that tunes in, participates. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.